Let me ask you this, true or false? Cannabis is descheduled at some point in 2023. Hey everyone, welcome to this week's Trade to Black podcast. I am your host, Shad Dales. A lot of stuff going down in the last week to 10 days pertaining to the cannabis industry. A lot of equity investors frustrated right now with the inaction taking place in Washington. So what now? Are we concerned of where our portfolio is going to go pertaining to cannabis? What does 2023 have in store? Are you finding that your overall portfolio is down 60, 70, 80% and don't know what to do next? So we want to continue this conversation, and this is what our podcast is all about, bringing in Travis Goad, who's the managing partner of the Pelorus Equity Group. We've had you guys on a few times. Before we get into details of your business, happy holidays. How are you, sir?
Oh, I'm great. Happy holidays to you too. Thanks for having me on, and it's good. Just busy into year end, and a lot of stuff happening that's is very interesting.
Have you followed the market and the news, to say the least? A lot of action going on, negative action pertaining to the equity side. You know, a lot of people were optimistic that they hoped safe banking would pass, but that pretty much has all but been confirmed that it won't pass. But have you followed it closely at all? And most importantly, what kind of opportunity does it present for your company and your firm as people are starting to look for other solutions now when it comes to their investment dollars?
It creates a lot of opportunity for us generally. I mean, yes, equities are down. Cannabis equities generally are more volatile than other spaces, and I think oftentimes kind of overpriced, potential positive catalysts that may occur. So if you look at, the question is, what would safe banking do for this space? I think it would be a positive legislation to finally get federal movement to action on cannabis. However, from the day-to-day, it's unclear exactly how much it would change the space. I don't think once safe banking passes that every bank in the country is going to rush in and lend money, and I think that they'll still take kind of a cautious view. Because there's other issues away from just, the federal implications, because cannabis still has a cash element to it, and there's still regulations around just high cash businesses and how you have to comply with know your customer and KYC, et cetera. So it's much more complicated than just, this passes. So I do think oftentimes equities overprice the upside that may come from this. I would love to see safe banking, and the question is, what version? Would it include uplisting, which I think would be a very positive catalyst? But one of the legislative things that we're really looking for is to address the 280E issues and some of that need to be more comprehensive solution. I think could have a more positive impact to the bottom line of some of these firms.
So if I look at it, and I know last time I spoke to Rob Seacrest, who's definitely a name in the cannabis industry amongst a lot of multi-state operators, very big thought leaders, have a lot of in-depth questions and conversations with Rob. But the average check size is between $250,000 to $300,000 as to what you're dealing with. Maybe break it down number-wise as to what that would equate to if you're distributing out on, like, say, monthly distributions based on an investment size of that amount.
Yeah, so you'd be at, call it 40, at 15%, right? You're going to be at about on a $300,000 investment, you're going to be at 45,000 is what would be coming off of that for you, so if you look at that on a monthly distribution, you take 45,000 divided by 12, and that would kind of get you to, just about 4,300, 4,200 a month that would come in off of that. That would come in off of that investment. And so if you chose to reinvest it, basically at the end of each one of these distributable months, you would basically reinvest that into shares in the fund, which about 40% of our investors currently do today.
Okay.
And you get the benefit of that compounding, which will up your yield over the course of that year.
So you're talking about compounding, and one of the things I've learned in previous conversations too is you're doubling basically your investment on average every 4.2 years, correct?
Correct, yes.
Okay. Was I said, like, as far as like people earning income from the interest paid off of like some of these assets, and you talked about growth. Last time that we got a chance to speak with you, you closed a $17.3 million debt financing agreement with a company called Vassar Acquisitions Property Management LLC to build out its modern 90,000 square foot greenhouse and 8,500 square foot processing facility within the state of Michigan. So give us the particulars about this latest deal in the U.S. Midwest.
Yeah, so it was an interesting transaction with the group that's doing. They have some licensing agreements with some of the top genetics, out in the country, and they have the ability to sell that into the Michigan market. And they're taking an approach, and we love it when people try to increase efficiencies and do things better on the cultivation front. And so they have a model where they're doing a lot more automation and other things that we're hoping will show up in higher margins over time. And so with everything in a new space, you got to try it and see if it works. And we're excited to kind of see how, if they get those margin uptick that they're expecting to get. And it was an interesting project.
So when I look at equity markets down 60, 70, 80% for the year, you're providing 12 to 15% monthly returns. I've learned, lending assets was anywhere between $6 and $7 million as little as 3 years ago. You're now around $400 million. What is your growth trajectory? Because I know a lot of it was based in the California, but now you're starting to disperse and build a more and more footprint across the U.S. But what does 2023 look like for you as far as growth trajectory?
So we have a tremendous pipeline in front of us. So we have about a $600 million pipeline of strong assets and strong markets. So new markets that we want to look to enter, East Coast markets, Southeast Coast markets, things that, markets we're not in today, but we're constantly looking at deals in this space. So it's a very unique time to be able to invest in cannabis because what the Fed is doing with how they're raising rates and basically sucking liquidity out of the market, it's felt across the space. You can see it in all the main asset class. You can see it in S&P. You can see it in corporate credit. You can see it up and down. But when you're in a less liquid asset class like cannabis, it impacts it even more. Just kind of like you see in the equity moves. And so right now, there is less capital available in the space, and so pricing for investors is actually very strong right now. So if you have capital to deploy, you're able to deploy it at very attractive risk-adjusted rates, and usually get warrants as well in this thing. And that's another thing that we haven't really focused much on in this space, on this conversation, but we get warrants in a lot of these companies tied to our lending. So the cash distributions and the IRRs I've been quoting, you still have exposure to warrants as well that can, and when the market turns around, provide some of that additional juice that you would look for as an equity investor, but you're still in a senior secured position and getting a very nice cash yield. And so, we're able to get more warrants and better pricing in this environment and have an opportunity to kind of go up in quality of operator as well. So, as you saw with our last deal or 2 deals ago where we closed with TerraSend. So it's a great credit. We're very happy to have them in the book.
Who would have thought you could make money in cannabis, right, Travis?
Right.
It's if I had to look at an actually bold statement, what does 2023 consist as far as your growth?
Being in a fund like ours is ideal because you're senior secured on a hard asset, which is critical for their operations. So they need these complex facilities with specialty use build-outs in order to grow quality cannabis and process it, manufacture it, and distribute it. So it's pretty much core to their business. You're sitting effectively at the top of the capital structure on these companies because you're senior secured. And in a fund like ours, we're collecting interest payments. We do monthly distributions. So it's that 12 to 15% is not a hypothetical IRR based on some mark-to-market securities. It's actual monthly cash that you get to distribute. So you see that show up in your statement. And we have a good chunk of our investors that actually choose to reinvest. And so the beauty of our fund is if you do reinvest your monthly distributions, you're effectively compounding that 12 to 15% yield. And that usually adds a couple hundred basis points to your overall yield. And so it's just it's a more secure place to be and get exposure to the cannabis sector while still getting really nice, carry interest distributions.
Similar to the crypto industry where there's the short-term uncertainty that's going on right now, that whole FTX fiasco. When you look at the long-term growth of the overall industry, if you had to put it into a few words, how would you best describe as to how this industry is going to perform over the next 2 years?
I think growth in the industry is going to be great. It's really new markets are going to continue to go online. and it's going to continue to grow. I think you'll probably see some consolidation in the space. And as you watch cannabis generally, you do see certain markets have short-term oversupply issues, and that typically overcorrects the other way over time because it's a perishable asset. So I do expect to see some volatility in certain markets. Some markets maybe, perform less well than others, but generally what we've seen in those situations is consolidation and then continued sales growth and continued growth of the industry overall. And so, we're excited about the opportunity set in cannabis.
What's the total amount of lending assets that you have? Memory serves me correctly. My last conversation with Rob, it's around 350 to 400 million, correct?
Yeah, that's correct. It's right around.
And the goal is to get to over $1 billion in the next 12 months?
Absolutely. I mean, our goal is a function of our pipeline. We have 600 million in our pipeline today, and the goal is to continue to grow.
Go ahead, finish your thought.
Yeah. So whether it's $1 billion by the end of this year or into next year, we're focused on finding quality assets and deploying capital in a good risk-adjusted way, and continuing to help this industry grow and deliver good returns to investors.
So does that mean even greater returns from where you're currently sitting at now?
I think that there's upside here, especially when you get some of the warrants at these depressed pricing valuations, as everybody can see, is equities, et cetera. You come for the coupon. We have a nice coupon that ultimately gets distributed to investors, but you still get exposure to some of that upside that, as the market turns around and maybe some of these other positive catalysts come through, you still get that additional return from that. So and we expect it to be a good year.
Have you received more phone calls in the last week or two based on a lot of the news that's come out of Washington and the inaction that politicians have made about moving cannabis forward?
I think the industry is fairly conditioned at this point that,
Yeah, is it? Yeah.
It would be great if it happens, but it's been dangled so many times and hasn't quite. So I know there was quite a bit more than I've seen previously that some people really thought maybe this was finally the year where that would happen.
Yeah, I know.
But it hasn't, and the way we've structured our business and the way the good operators in the space have done it, you're not dependent on that. I mean, it would be nice. It would affect being able to use a credit card at dispensaries. It would do some of these things that I think would up your basket size. I think it would potentially help us, when we go to, access capital markets and bond markets like we did. We were the first debt fund to ever issue a senior unsecured corporate bond. We were investment grade rated. And so I do think, there may be a widening appetite on some sort of legislation, but I don't think it's going to be the game changer that everybody expects. And I think there's other legislation that will have a much more impact on the space. But having said that, any legislation at this point is like a beginning of real change, and so
yeah.
All of it.
Wanted to ask you, like your background before you started Pelorus, you're a hedge fund manager. How do you think institutions are viewing this industry?
So I think there's a lot of institutions that are very curious about this industry. I think that a lot of people see opportunity in the space and higher yields relative to other assets and potential for growth. So there's a lot of interest, but because you're an institution, oftentimes you have capital you've aggregated from sources that are unable to invest in cannabis, given that it's still federally illegal in the U.S. And so while a lot of people are looking at it, and what we're seeing is that their attitudes are starting to change, where some people some institutions that we've spoken to, 2 years ago, it was a hard no, I could not do it. And then you're starting to see a softening of positions, and we're trying to really educate institutional investors as well as to educate on the perceived risk and why the risk of allocating to the space really isn't as high as compliance departments may think out of the gate. And so we spend a lot of time trying to educate that. But we're starting to see a little bit more institutional interest in the space. And I do think once there was, and I don't think safe banking is a legislation that would be the catalyst, but some sort of descheduling, some sort of legalization, some sort of clarity on the conflict right now between state and federal policy, I think would be a tremendous catalyst for new institutional capital coming into the space.
Let me ask you this, true or false, cannabis is descheduled at some point in 2023. Is that true or false?
I'll take the over on that one.
Avoiding that one at all costs, right? I'd be curious, being a former hedge fund manager, though, do you find that you get there's a lot of advantages when speaking with institutions and like, especially talking about, your model as to what you're working on now, but what are some of the advantages that you can actually, I guess, have access to based on your previous profession as to what you're doing now and basically building the whole narrative of cannabis moving forward?
Yeah, sure. So, I mean, I spent my career in institutional. I traded CMBS, commercial mortgage-backed securities, at a large hedge fund in New York. I also led special situations investing, where we're looking at some distressed assets. So I know how institutions want to think about risk management. I know how institutions want to think about allocations, and it's a world that I come from, and I know, and I've learned a lot through my experience. And so one of the things that I learned was, at the hedge fund, we had a team of quants, and we could buy great data. There was data providers, Reese, CoStar, etc., that track traditional real estate, and so we were able to take in a lot of great data and then slice and dice it many ways and come up with real meaningful analysis and projections on what we think that we can do. And in cannabis, none of those service providers track that. So what we did was actually founded a affiliated data company, and we have a best-in-class data team. We're scraping data from over 20 different sources into a proprietary database.
Wow.
So we go out and actually grab the data, pipe it in, and now what we're doing is really analyzing it. And so I can give you a little insight of some of the stuff that we know, but for instance, in California, they'll publish all the license data,
Yeah.
but they won't publish the locations of cultivation or manufacturing facilities for security reasons. From a real estate perspective, it's very important to be able to know those things when we're thinking about lending decisions and where people are at, et cetera. We were able to map, actually using multiple alternative data sources, every single facility in the state of California. We know whether it's a greenhouse, we know whether it's outdoor, and we know whether it's an indoor grow, manufacturing, et cetera. So it really helps us get a view on these markets that others aren't doing in the space, and then something that we use heavily to help us kind of understand the depths of these markets, when there might be oversupply of facilities, when there might be undersupply of facilities, and try to use that to help us look at not just the asset itself, but kind of the broader trajectory of this market, where we think risk could shake out, and how we want to think about entering these markets or not.
That's like a business model in it itself, outside of what you guys are doing as far as the lending, I would think, yes?
It is. I mean, right now we use it fully proprietary for ourselves, but yes, it is. It's a real undertaking. So it's weekly calls with our data teams. It's going through and scrubbing data, verifying data, making sure calculations are flowing through. So I mean, it's an undertaking that takes a lot of effort and time, but we believe it's really worth it.
Do you think that's a model that eventually, in due time, knowing how badly the industry would need something like that and need something like that you'd want to take that public?
We'll always think about benefit and return to ourselves and company, and what the right move is vis-a-vis our main fund versus whether we want to do a monetization strategy on that.
Yeah,
but we're always thinking about things and trying to make those decisions as we grow.
Last thing I wanted to bring up, and I would want to educate my viewers on this, the confusion of the market. It's about the sensitivity of different types of REITs and the rising rate environment. The consumer price index, it came in much weaker than expected. Further to that, the Fed's latest rate hike might be its last, and rate cuts might be in store for 2023. So help me and my viewers understand, does a declining interest rate environment work in your favor? If so, can you explain how?
Yes, so declining interest rate environment, I think, generally works in everyone's favor in an economy. And what you saw basically was, post the 2008 crisis, the Fed really lowered rates, did quantitative easing, and that had the effect of basically adding a tremendous amount of liquidity to the system and effectively pushing people out the risk curve. And so what you're seeing, and that was to support growth. And what you're seeing now is that it's the reverse of that happening. So they're actually tightening financial conditions. They're raising interest rates, which is actually just pulling that liquidity out of the system. And it's having a lot of follow-on effects for risk assets and where those risk assets are pricing and what's fair value, et cetera. And it's definitely having its exact intended consequences. You see that borrowing has gotten more expensive. You're seeing you see it in the housing market. Sales velocities have plummeted, and it's having that cooling effect that the Fed has been seeking. So I think if they reversed course, it would be a reversal in injecting that liquidity. So I think that would be beneficial generally. But typically, when you're going to see that, it's going to be in a recessionary environment. So I think my view is that they're probably going to hold. They're going to take Powell at his word. Don't fight the Fed. He's going to continue to hike for a little bit, and he might sit there. And I think maybe they hold there for a while if the economy just slows gradually. But if it falls off, or it contracts meaningfully right away, maybe you do see a little bit of a pivot there. But it'll be interesting to see how it plays out.
You seeing a lot of momentum? Like I know you guys started in California. You made two big announcements this fall with Terracent, and now this announcement out of the state of Michigan. But is there a big focus and goal to focus on the Midwest going into 2023?
We're looking at every new market that comes online, and so you typically see you typically see a trajectory where a new market comes online, the infrastructure doesn't exist, it needs to be built. So we see a lot of demand for construction loans in each one of these.
Yeah, that's huge.
And then once the infrastructure is essentially built, then we see a bigger demand for stabilized lending across these things. So we're looking at any new market that's available, and we'll look at stable markets as well. So there are typically you'll see a big undersupply and a spike, and then an oversupply and a contraction, and then kind of you get to more of a stabilized sales metric and a stabilized kind of universe of market participants. And so we look at all markets.
Well, one thing I will say, this industry is so polarizing. Whenever you talk about this industry from a business standpoint, from a consumer standpoint, there's so much interest pertaining to it. Speak to a lot of investors that are frustrated because they see the growth opportunities, but the inaction, what's going on in Washington, it's just delaying things. But it's a real good story, as to what you guys are building out, because if you speak to a lot of the investor base that's frustrated right now with their portfolios related to cannabis being down, like I said, 60, 70, 80%, you tie in obviously the interest within the space, which is cannabis as a whole, and then further that giving 12 to 15% returns. It's just a matter of just really resetting and re-educating like a lot of investors that are looking at things maybe in the wrong direction. But do you find that a lot of the times when you're speaking to a lot of people that are unaware of like what you're actually providing?
Yeah, I do think a lot of people thought the best place to be, especially in this industry, when it first launched. I remember, in 2018, when I first started taking a look at the cannabis sector, there was a view, and frankly, I kind of shared that view at the beginning. I said, well, why would you want to be in debt with a capped upside? This is going to be an unlimited upside market that's only going one way, and equity is where you want to be, so you get those 20, 30x type yields. And I think what you see is it's in new industry, it's challenging. So industries kind of grow in spurts. What works in the first year of the industry doesn't necessarily work as a business model in the second year of the industry. And so there's just a lot of challenges that you would expect in any new space. And so what we've seen here at Pelorus is that debt has been the best way to get exposure to it. So if you want, you're outperforming alternative investments, you're getting current cash distributions, and you're in a senior secured position with exposure to equity upside as well with the warrants that we have in our fund. So you get a great balance of near equity-like yields in a debt secured position with a few, warrants and sweeteners on top of that, if this, when the industry rebounds or there is one of those companies that has a, 5 or 10x return, you see some of the benefit from that too. So we've just seen it as, the best risk-adjusted way to be in a new space. And then as the space figures itself out and consolidation occurs and some of these headwinds and challenges on the 280E and other things are resolved, I think equities will be a very interesting place to be. And so it's just about, we're in the early innings of a new industry, and being in a more conservative posture has proven to be really good for us.
Need to re-educate people's expectations, but there are good stories out there if you look in the right places. So listen, to all you and the entire team, happy holidays. Be watching, obviously, heading into 2023, but exciting times, to say the least, when we look at the growth trajectory that you guys have basically slated out over the next 12 months. But best of luck, and let's keep in touch.
Thank you. Happy holidays to you as well. Thanks for having me on.
All right. Thanks, Travis. Hey, everyone. Thanks for watching. 2023 is here, and right now, a lot of uncertainty pertaining to the markets, especially new emerging industries like crypto, cannabis, psychedelics, and more. So leave a comment below and let us know who you want us to interview. What are the questions that you want asked? And most importantly, what's the information that you want to learn? Once we produce these videos, then share this to your network, subscribe to our channel, and click on that bell for all notifications because we would not be here without you. Thanks for watching, everyone.